Okay, so you can see the candles. Okay, somebody's coughing. Can you mute your mic? Okay, so real quick, I'm gonna go over. I know some of you guys put up there, and you guys was messaging me like you guys was having a hard time understanding the basic anatomy of a candle. Um, you guys had a hard time understanding measuring the pullbacks, okay, and you guys had a hard time understanding the counter box in the when you do 512 and 233 tick chart. Okay, so what we have here, just a basic candlestick run. If you see to the right, I put prices on there, yeah, from 37.50 up to 37.56. Okay, so obviously green is going long, going bullish. Somebody's still coughing. Can you mute that? Um, and then we got red going short, going bearish. Okay, so the first thing we're gonna look at is when the candle. We're gonna look at the long side. Okay, and green candle. First thing we're going to look at is the open of a candle. Okay, so the open of the candle is always on the bottom side, the fat part of the green candle. Okay, that's the open. Now, on the open, you're going to have 0 out of 512 on your tick chart counter. Okay, so you remember now you need 512 trades for a candle to show up. Okay, now I know it does move fast, so at this point, you want to get into a trade when it's at least below 250, 256 to 250. Okay, on that counter box. Okay, on that counter box, you want to get into that trade when that number is 256 or 250 and below. Okay, now the next part of that candle when it runs up is gonna. Somebody's still see that the high of the candle. That's where your wick is gonna go. Okay, the upper part of your wick is going to be the high. Okay, now at the high, that's when it's 512 out of 512. Okay, just about when it's ready to close, actually, when it's 512 out of 512. But you don't want to get into a trade anywhere between 256 to 512 where the candle closes, because if you look at it, right, if you look at it, you cannot, it's too late because of the pullbacks. Okay, so you don't want to get into a trade anywhere in this range. From the 256 to the 512 range, you don't want to get into the trade at this point. And the reason why is now we got the pullback. Okay, so on this particular candle, we opened at 37.50. If you look over to your right, okay, and then we went to the high right there. The high is at 37.54. Okay, your first pullback from the high of the wick to the close of the candle. That's your first pullback. So if you look at that, it pulled back to 37.53. That's 4 ticks. Okay, that's a 4 tick pullback right there from the high of the wick to the closing of the candle. That's 4 ticks. Okay, now your final pullback is to the next open of the next candle, which is here. That's another 6 ticks from the closing of the candle. Okay, so altogether right there is you have 10 ticks of pullback. So from the high of the previous candle to the open of the new candle, that's your full pullback, which is at 10 ticks. Okay, so 2 things. If you got a 6 tick stop, you're going to get prematurely taken out right there. Okay, so you won't be able to get into that trade because you have to move based on this measurement. Okay, you have to move your stops out beyond 10 ticks. But with 10 tick stop, you got to remember now your risk level, the risk level of that. Okay, so 10 ticks on that would be what? For 850, 850, what? to $450 or something. That's your risk, $400 or $500, about there. Okay, so you don't want to risk that per trade. If you don't want to risk that per trade, then you don't want to get into this trade. Another thing is, you see the pullback. Now, if you get into the trade between the 256 level and the 512 level, if you get into that trade, you're gonna be down into the negative, because look where it pulls back to the open. Okay, so you don't want to get into a trade late on the counter. Okay, you want to get into that trade between the 0 and the 256 level. That way, your next candle, it'll run up. That way, you're going to be into the positive. Yeah, everybody understand that? And then this goes same for the red side, except it's just reversal. Yeah, the open is on the top side of the red candle. The pullback is going to be from the red wick to the next open. Okay, so on this pullback, 10 ticks, you don't want to have a 6 tick stop. This is where you're going to have to modify it. Okay, now these are the wicks. As you see it, when it goes up, it runs into a pattern, right? And then you see on the top, when the wicks start to consolidate at a single level, that's when you cause a resistance. And this goes for the opposite side too, as a support. When all the wicks come to a certain level, at least two or three levels strong, that should cause a good resistance. By that point, you should have a R1 or R2 form. Okay? And then in the middle of that 4 candle pattern, you have a doji. Okay? Doji usually signifies reversal. Okay? So at that point, you're going to have a red arrow. Okay? You guys got that? Any questions? Now's the time. Open your mic. Okay? Hopefully you guys can understand now the why you want to get into a trade within the 256 out on your counter box, and how to understand the pullback. Okay? All good? You guys got any questions? Go ahead and open up your mic. Okay, I think that was big, because a lot of you guys didn't understand why the counter box was such a big deal. Okay? Why the counter box was such a big deal. Because if you get into it late into the candle, then you're gonna miss it. Okay? You're gonna miss the trade. So let me show you guys real quick. Okay, I'm gonna do another screen share. Okay, so over here, this is the counter box up here. Okay, you want to get into the trade when it's like, when this number right here is about 256 or below, like anytime right now. Okay, anytime right now. Okay, anytime right now, you're still good. You're still good. At this point, you shouldn't get into the trade yet until the next candle. We're gonna watch it over here. Okay, boom. Now you can get into the trade over here. Okay, and this is where you're going to measure the pullbacks right there. Okay, here. This is where you're going to measure the pullback. Pull back here, pull back here. Measure this distance. Pull back here, pull back here. Measure that distance. Take the average. That's what you set your stops at. Okay, pretty simple. Okay, now a lot of you guys say, how do you move this box? Okay, so to move this box from the top to the bottom, okay, you're going to come down here next to your zoom tab. Okay, there's the expansion settings. You're going to click on that box, change right expansion. Okay, counter location, top to bottom. Okay, and you just click apply, and then that thing will move down here to the bottom. Okay, same thing. Expansion settings, bottom to top, apply here. Okay, perfect. Okay, we got that. Hopefully, you guys understood now what it takes um, for the candlestick. Okay, how to measure the pullbacks and how to understand why you want to get into the trade 256 count and below. Okay, and then whenever it starts to form a support or resistance, plot that line. Okay, and play the reversal or the breakout. But you see, like where we're at right now. Okay, we're at support. You can look for a reversal. You can look for a continuation. Okay, look at your chart patterns. Look at your signals. Okay, see that right now it just bounced off the support, and then we just have a small reversal right there. Okay, so any questions? You guys can ask me questions on the mic. Perfect. By the sounds of your silence, you got it. Okay, so here's the thing. Here's what's gonna happen. Market's gonna be crazy tomorrow and Thursday. Okay, today is Trump's last day in office, so um, we good. Levels are still high. Yeah, we're still positive. We're still up on the Dow. Um, Tomorrow is inauguration. So tomorrow's inauguration is going to probably come about 7 o'clock our time. Okay. Um, I'll come on voice chat in the morning. We can look how the market is and we can just trade accordingly. Okay. And then just going to see what happens during inauguration time. Okay. Let's just see if Washington is going to pop off or it's going to be a pretty smooth transition. Okay. Um, Other than that, that's it, man. We got some good trades on the Nasdaq. We got some good trades on the E-mini. We definitely got some profits for the day. So even if you don't trade tomorrow, it's still good for the week. Okay. If you guys don't have any questions on voice and you guys want to post it up on chat, go right ahead. I'll read it either way, and I'll respond either way. Okay. Perfect. It's raining, man. So let me see. I'm gonna contact one of you up there because I think we got a refresher we gotta do. So I'll see you guys tomorrow. Okay, 5 o'clock. You guys have a great day. Stay safe.